What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the weekly time frame. We have a ton to talk about here. When I'm looking at this chart, one of the things that stood out to me today that I did not notice over the past several days is the potential for a weekly bullish divergence here. Now, the way that you get a bullish divergence is you're going to get a lower low in price, which we're seeing here with a low here. We come up, we form a high, we come down here, and we're potentially forming a lower low below this one. And then we come up, and then for this divergence to be valid, we'll close this weekly candle wherever we close. And then the next week, we're going to have to break the high of this weekly candle, and then this will become a valid bullish divergence, because the other component of a bullish divergence is a higher low in the RSI. And you can see right now the RSI was at 44.19 here, and now we're at 44.96. So we are higher up on the RSI, but the price is making a lower low, which means that the bearish momentum is waning on this drawdown versus this one here. So that's great news for the bulls, but this isn't validated yet. So it's important to be very clear here that this is only going to become valid if in the next 2 days and 22 hours we close this candle above this low right here. Well, we actually that actually doesn't really matter. What matters is where the RSI closes. So this is not static. It's not going to stay at 44.96. This changes based on the buying and selling that happens in this weekly candle. So we're going to see what happens here over the next 2 days and 22 hours and see where this RSI ends up, and we'll talk about that in the weekly wrap-up, where we wrap-up video at the end of the week when we talk about Bitcoin's price action, and we'll see if we end up getting a potential for a weekly bullish divergence. If we do, a weekly bullish divergence could end up really propelling price in the direction that we want to go. Now, it's important to remember, though, that divergences are not everything. They're just one signal among many. And so it's important to have what we call a confluence of signals across multiple different things that you look at, meaning you're seeing the same thing, you're seeing consistency across multiple things. So in the case of right here, we have an example of this. So here's a bearish divergence with a higher high in price, but a lower high in the RSI. You can see we had a little drawdown right here after we broke the low and confirmed this bearish divergence, but it was very short-lived before we went up and broke to a new higher high. So divergences don't always tell you the whole story. Same thing here with this potential bullish divergence. Even if we get this, this bullish divergence could be very short-lived. We'll have to see what we end up getting. This light blue support zone, though, is still our main support zone that we're looking at. If we look at the resistance zones, if we close this weekly candle below the R1, that'll be our main resistance zone, which is right up around $37,800. After that, we are up here at the R2, which is up at about 46.3. Going to the 3-day time frame, if we look at the 3-day, we're about to form a 3-day bullish divergence here with a lower low in the price action here and a higher low, very significantly, in the RSI. So this drawdown was weaker than this drawdown in the sense of bullish momentum. So this one had a lot more people buying the dip than this one had. Now, it's important to note that the reason this had more people buying the dip is because we went below this key low, and this key low down here. So 3 key lows got swept with this one candle, and when that happens, that is typically a sign of a liquidity grab, meaning people were buying the dip there. So we will see what we end up getting here, but if we're a long-term bull, something that keeps us with some hopium here is that this monthly candle closes in 5 days and 22 hours. And if this candle ends up closing with looking relatively bullish here, this will end up being very good news for the bulls with some, not super long, but decently longer lower wicks of people buying the dip. And then we'll see if we can get a rise in price thereafter going into the summer months. as we're already kind of in the summer now, but going further into the summer months. If we look at the 2-day time frame, we can see the trade setup that I'm still currently targeting, and the reason for that is because I still like this resistance level. In the short term, this is a short-term trade for me. I'm not expecting this trade to go bananas by any means, but I am expecting that if this does go into this pink line right here, I am going to go short, and I'm going to put my stop loss above this level, somewhere up here. And the reason for that is because if we look at this level right here, what we can see is the bull trend, the low, high, higher, low, higher, high, and then a breakdown. And when we get this breakdown, we then get this zone being a strong resistance because it should have been support right here on the retest, but it did not act as support, and we pushed right through it. Now, as soon as we pushed right through it, we then are seeing a bounce here. Now, it's important to measure the magnitude of price movements when we see either a drawdown or a bounce. Now, this drawdown right here was about 30%, okay? So that's a pretty significant drawdown in one move. So it's not impossible for us to go back up 30% in one move, but it in my opinion, is unlikely to just be bouncing around 30+% all the time. It's more likely, because this move was so significant down, that we'll come up here. We've already bounced about 22%. I imagine that for us to go above this level, we'd have to go about 34% from the bottom without forming a lower high. I think we're going to form a lower high, and I think we're going to form it somewhere inside of this gray zone. And so that's where I'm putting my money. I am putting my short right on this candle body right here, which is right around 37.3. And we'll see what happens in 21 hours with this candle. If we start seeing some waning bull momentum here over the next 21 hours, we'll see what we get. But if I get stopped out of this trade, I'm not going to be very mad, because that means that Bitcoin is really going to be bullish here. And we could see something like this. Where can I get my tool? So this is where we push right through this zone. We close 2 candles above it, we retest it, and then we bounce up to this 47K zone. So even if we do that, the thing about that is I'm totally fine with that, because this is a numbers game. So if I get stopped out of this trade, if I enter here and I get stopped out, I think my stop loss is on the 8-hour time frame above this candle right here, which is at 39,430 roughly on this exchange. So let's go to the 2-day and see roughly where would that end up. So that is about 39. It's right around here. So it's about a 5.57% loss. Now, if we go through this zone and I get stopped out, that means that we're massively bullish, and that's fantastic, great. Then I'll long a retest of this, and then if we measure this up to where I think it'll go, which is up here at about 47K, that is going to be, even if we take it from the top of the level, that is about a 22% gain. So even if you subtract off the loss that I would have taken from the initial playing this level, because this is a valid level, it's just, in my opinion, it's just a matter of if it's going to hold as resistance and reject off it once, or, if we're going to push right through it and then bounce off of it. Either way, I'm going to play both sides. If we reject off it, great, fantastic. I think we will. We didn't do anything to it right here. It's very rare for levels like this to not hold on this first retest of this level. So we will see what happens here. And if we look at the daily time frame, we're seeing the same exact pattern here on the daily. Now, the thing about these lower time frames like the daily and the 2-day is they are lower time frames than the weekly and the monthly. So the weekly and the monthly, we need to be aware of that. When do these close? So the weekly still has 2 days and 22 hours. So it basically has 3 days left before this candle closes. So we still got time on that for this trade to pan out. The monthly closes in about 6 days. So we have plenty of time on the monthly for this trade on the 2-day time frame to pan out. The weekly is a little bit tighter of a time frame, so we're going to play this by ear over the next until the week closes, so about 3 days, and see where this ends up. But either way, I like this trade. I like this setup. It's also confluent with the Super Guppy indicator, which is starting to roll over here in gray. This is the 2-day Super Guppy, so it hasn't quite gotten to the dark red longer term EMAs here. But if we look at the daily time frame, it has. So we're seeing that here, and we've only tested these once. So a second test of these would be pretty good. The other thing to note is the declining bull volume here on this rise. So that's not good for the bulls to push through this level on the first test. So all in all, I still like this trade a lot. If we look at the Ichimoku cloud, we're also in the most bearish position here. So overall, I like the setup. That's all I'm going to say about that. Now let's go to the 4-hour time frame and talk about what we have going on here. So 4-hour time frame is just pretty much massively bullish. So if we look at this from the perspective of a trend, we actually do not have, right here we had a bull trend. So we had a low, high, higher, low, higher, high. Now we came down, we formed a higher low, lower high, lower low, and then higher high. Then we came down, we retest this kind of like resistance zone here, and now we're bouncing off of this here. So if we look at the Ichimoku cloud, this initial breakdown here was, people pricing in that this was the area to short on the 4-hour cloud. But the thing is, when you're on when you're looking at like higher time frame liquidity grabs, like what this potentially could have been, this price action right here is not uncharacteristic of moves like this, where you have a short drawdown with people thinking this might be, the drawdown, and then suddenly you have the, next bounce. So the indicator right here on the 4 hours not really providing a lot in terms of guidance. If we look up here, the other thing to note is this hourly pivot, which is inside of that 2-day gray zone here, the resistance, and that is at about 36,700. So that's also important to note. One other thing to note here is the potential for, if we go to like the 6-hour, it's probably easier to see. Yes, it is a bit easier to see. This is a potential for an inverse head and shoulders pattern. So let's measure this out and see. Now, when you look at this pattern, when you look for these patterns, specifically the inverse head and shoulders pattern, you see that the slope of the neckline is down. So that's that means that the price move, that the movement off of the neckline, once we break through it right here like we just did, and potentially retested it right here, depending on how you draw your line, it's not as bullish as if this was sloping upwards and was slanted upwards. So when this is sloping down, it's more bearish. When it's horizontal, it's neutral, and when it's sloping upwards, it's more bullish. So this is what we call a bullish reversal pattern. So this comes at the end of a run, which potentially we're seeing right here. And when this happens, the target for it is from the head, which is right here. Let me grab my magnet. Up to the neckline. So the neckline in this case, it's probably, we could measure it from right around here based on this line here. That's about 66.55. So 66.55 from the breakout zone. So here's the breakout right here. So if we look at kind of right about there and we measure up 66.55, this is way up here. This is, we can't even fit it on the screen. 66.55 is somewhere up here at 41K. So we'll end up getting stopped out of the trade that we're in if this pattern ends up playing out. Now, the reason why I'm not really concerned with this pattern, and this is, where you have to sometimes take risks as a trader or investor, and, obviously nothing on this channel is financial advice, and you should, make your own risk judgments, absolutely. I don't really care about this pattern as much because the higher time frame here is the 2-day, and that's what we're making the assessment on. Now, this time frame is higher than the lower one, so we disregard the lower one when we don't disregard it, but we just weight it in our heads less. So here's the other thing. So let's move this box over here. Here's the daily time frame. Now this is a very, very clean level, okay? So if we look at this from the perspective of this resistance level, so we had a low, high, higher, low, higher, high, and then we broke right through this zone. So as we go into this zone, we're getting very close to touching the body of this candle. Now the bodies of these types of candles are typically very strong resistance. Now the other thing to point out is this candle over here, which is our previous support right here. So overall, you see the price is kind of rejecting this level as we speak, going from where it was at the beginning, I think was 35.3, and now we're down to 35.160. So it's kind of rejecting this level, and you can see the declining bull volume. Not good news for the bulls, but we'll see, because the higher, like the 3-day time frame is just about to potentially form a hidden bull regular. I don't know if it's regular or hidden. Honestly, I don't really care. All I know is it's bullish. Bullish divergence here on the 3-day right here with a lower low, and then potential for a push off of this bullish divergence. So that's what we're currently seeing here on Bitcoin. Yeah, that's about all I got for this one, guys. So if you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner tactical analysis course that we released on Leutheria.com. This is where you can get all of the foundational elements that you need to get started generating consistent profits, trading cryptocurrencies like Bitcoin and others, so you can have those experiences in life that you want to live. It helps open up some of those doors when you start to generate more financial freedom for yourself. So check that out. And until tomorrow, onward and upward.